Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, September 8th, 2006, and the market's just closed, so let's go ahead and take a look and see what happened today. Yesterday, I was expecting, as I said, for a lot of back and forth action, quiet day today, and that's exactly what we got as the market put in an inside day, meaning that today's range entirely was engulfed by yesterday's range. Today's low was lower than yesterday's low. Today's high was higher than yesterday's low. So it didn't trade outside of yesterday's range, also known as an inside day. Now, we've had this stabilization near the rising 20-day moving average. Yesterday, I said it was bullish to see that the volume had picked up near the end of this move. We saw a little bit of stabilization, and what we were looking for was first this correction price-wise. Now it looks as though the correction is occurring maybe through a little bit of time here. It's still too early to say it's a successful test of the rising 20-day moving average, but because the 10-day is above the 20-day, which is above the 50-day moving average, and they are all advancing, we're going to continue to give the benefit of the doubt to the buyers until the market makes a lower low. And that's not going to occur realistically till probably below these lows right here, 37.90 or so. But I would be concerned early next week if the market takes out this low and stays below it. If it came down, actually it'd be pretty bullish if Monday maybe we had some little news, it made a slightly lower low and then trapped some sellers and then was able to push higher. Let's take a look at the 10-minute time frame to get a better handle of where we are right now. As I pull up this trend tool, it doesn't look like my 10-minute data is pulling up right at the moment, and there it is. So what we saw again was this inside day. Yesterday's high was not taken out, nor was the low. So we're having a little bit of stabilization. It's nice to see that these moving averages, the red and blue ones, are crisscrossing, meaning there's indecision. Indecision occurs during accumulation and distribution. So hopefully this is accumulation before the market continues back higher again. Now in the 30-minute time frame, we've got, we had noted the uptrend line that had been broken, and I think I'm going to have to back it up maybe another few days to see that. So let's go to 20 days worth of data. And the uptrend line we were talking about was right there. Now, in order for this market to get more bullish, realistically, I think it's got to really take out that 39 level before we can really become more confident. But just getting above that 5-day moving average early, Monday or Tuesday of next week ought to help the bulls considerably. So the jury's still out on the Qs, as is the same with the SPY. SPY here. And again, the same thing's occurring, though, that we're getting some kind of stabilization, it looks like, above the rising 20-day moving average. Now, that's the way that a bull market is supposed to progress. So it's doing what it's supposed to do. There's no reason to be concerned yet. The only reason for concern would be a failure here. And in particular, closing below this low would have been pretty negative in my opinion. But, this resistance did act as support once over here, and once again now when we have the rising 20-day moving average in that area also. So in order for this market to really become more bullish, we're going to have to see 130.60 taken out on the upside. And today, we could make the case that we're making some higher lows, but realistically, we've got to take this, yesterday's high out, as well as this prior level of support, which might still have some sellers there. We've still got this 5-day moving average declining, so that gives me a little bit of reason for concern. But again, the primary trend on the daily and even the weekly time frame are higher here, so that trumps the short-term trend for now. But it tells us there's no reason to be involved at this point yet. Another thing I wanted to point out was the daily VWAP. Today, the market held above that VWAP. And actually, if we look at a 3-day chart with a VWAP, you can see that the average price that the market closed at over the last 3 days, so Wednesday, Thursday, and today Friday, when we had weakness on Wednesday, weakness on Thursday, if you took all the volume that occurred at each price, the average transaction occurred right at about 130.28, and the market closed at 130.30. So it tells me that there is accumulation going on in here, and the buyers are stepping up and taking control slowly back from the sellers, and that I think sets us up good for next week. And by the way, that also occurred in the Qs as well. I believe it was true earlier. Let's see if it held, and it kind of fell right on that level, which Seems pretty strange to me, but that's exactly what did happen. The IWM Russell 2000, we were hoping for a close at least above 70.50 for the week. We got that just barely, $70.55. You know, we had been looking, you know, a week and a half, 2 weeks ago at this declining trend line as something that's been holding the market back. Now the market has held above there, and we've got an uptrend line here as well. So we're at a pretty critical juncture for the IWM. I'd really like to see it get back above 71 or so real quick next week. I think that would really help the cause here, but back above 71 and closing above that level would really help the bullish scenario in this market. And we've still got the declining 5-day moving average, but I think maybe another day of consolidation, we can clear the sellers out and buyers can take control. If not, well, that's a whole nother scenario, and you better have your stops in place if you're long, is all I'll say for now. SMH, the semiconductors. Semiconductors pulled back earlier in the week, and we've been looking at this level, and it closed just below it again. So this level, this line, this simple line that we can draw across continues to be an important level for the market. That's about 33.50. And, you know, but we did get somewhat of a bounce off that 10-day moving average, 20-day moving average rather, so that's bullish. And looking at a 10-minute time frame, you can see we're starting, you know, same picture as the other markets. This green moving average is starting to flatten out, 5-day moving average. In order for the buyers to retake control with confidence of the semiconductors, I said this yesterday as well, the market's going to have to get and hold above 33.50 for the semiconductors. So that's what it's going to take, and if it can do that, then maybe we run up for a test of the 200-day moving average, but those are still declining. So we've still got a lot of mixed evidence here on the on the Nasdaq in particular and the semiconductors. Big story this week is a continued breakdown in the oil. This is USO, the ETF for the oil, and just a real nice breakdown. A lot of people are happy about that because hopefully we can stop paying $3 a gallon for gas, and maybe that takes a little bit of pressure off our economy as well. I'm not going to get into that stuff. Read someone else's blogs who's much more knowledgeable about the economy than I am. All I know is the trend, short-term, intermediate-term trend are lower in oil, so that's a good thing, generally speaking. Let's take a look at the stocks we had mentioned and then wrap this thing up for the weekend before I get another video out to you tomorrow. China, what I mentioned last night, we didn't have any open positions, so these are the positions I had mentioned last night as potential trade candidates. I was looking for a pullback down to $5.45 before it found some strength and continued higher. So officially, no buy in this stock, although it did break past this level. Maybe some of you purchased the stock anyways. If so, I'd say your stop goes probably below today's low. So about maybe 546 if you're in it, but officially we are not in it, so I won't update it. Unless I see another setup occur. Now, I don't know if this really occurred in input-output symbol IO. I'm going to assume that was a bad print right there on the open. If you look at a 2-minute time frame, it says it open there, but I don't see any volume in there. So in the 1-minute time frame, there was no volume. So I'm going to say that that's a bad print. What we were looking for here was to see the stock pull back to $9.90 to the 5-day moving average, and then rally up above $10 a share before purchasing it. That didn't occur, so there's no position in in IO. I was getting ready to type in the next symbol, which is UTSI, and this is UTStarcom. I guess that's what I'm going to call it. And anyways, we were looking for a purchase above $8.40 today. We got that, and our stop was going to go. I didn't make note of that, but let's do this. Let's just take a look at where the stop should be now, because no matter where I said the stop was, it didn't get stopped out because that's where it went above 840 and hadn't pulled back. I think your stop can go below here. This is about $8.28 for UTSI. So that gives us a 12-cent risk right now. I still think our target of 920 looks very doable here. It's got a great-looking weekly chart, and we'll see if it can get up to these levels, and then how does it act once it gets up there? Because if the shorts get squeezed in there and there's a big short position, maybe the stock could get up to 10.5, 11. If you're not familiar with how short squeezes are supposed to develop, take a look at that article and read that over the weekend. That's something I wrote a couple years ago, but it's still very relevant. We were looking earlier in the week for a short squeeze in real networks. That never occurred. Let's just take a look at real network, because I did get a couple emails on that. Would I consider it now? It's back. You know, I was looking at the breakout and continued strength. It broke back down into the range. Sellers took back control. Good job for them. I got stopped out. I lost money, so it's tough for me to say good job. You never mind. I'll be nice and leave my emotions at the door. But there's no reason to look at this thing long or short, in my opinion. I'm neutral on real networks. On to the next one. The next one was Lennar, and that was the last stock we looked at last night. This is a stock that's in a nice downtrend, and it got some news this morning. I had no idea there was news. Actually, you know, it wasn't reported that they would be having news. They just kind of came out with some news. I guess the news was negative because the stock opened lower on a gap, and people who sold down there quickly got trapped, and they chased the stock higher. That was a good thing, because what we were looking for in this stock was we were looking for a rally to 43.65, but we weren't going to sell it short at 43.65, because who knows, this thing could have kept going. You don't want to sell short the strength. Instead, once it attained that target of 43.65, we were then looking to sell the stock short as it broke below 43.50. Well, that was right there. Our stop was then going to go at 44.29. The high today was just about 44, so there was no stop. If you got involved in this trade, you know, our target was 41.5. It came down to 42, so there was a quick $1.50 in there. Hopefully, you took a little bit of that profit. Anytime you get a profit like that quick, I would suggest taking some off. But if you're still short Lennar, I didn't get involved. I would say you don't want to give it a lot of room here. Maybe just above 43. That way you can lock in about 50 cents or so. That's going to wrap it up. I will be back this weekend, either tomorrow or Sunday, with another video with some ideas for Monday. Thanks, and enjoy your weekend.